Hi there, De-Crypt back again with another video on the cryptobontics and the Dignity token. This video is not really an update. I've been noticing in the Telegram groups and the Bitcoin Talk forum on the Dignity token thread, there's a lot of doubt and a lot of assumption being made about the gold that's going to be backing the tokens, or this token anyway, the Dignity token. And I would imagine the same applies to whatever metals are going to be backing the other tokens, silver, platinum, and etc. But people are speculating whether they are going to be backing this token by gold via a note from a mining company, basically backing it with gold that is still in the ground, that hasn't been mined yet, or actually buying the gold and storing it somewhere in a ratio, obviously, to the amount of tokens in circulation. So we already know that they are going to back it by $1 worth of gold based on the gold price at a certain date. That will be a certain weight in gold, and that will be fixed. But there's no real hard and fast sentence in the white paper, the existing white paper anyway, that says it will be gold, and it will be either a guarantee against gold still in the ground to be mined, or gold that is physically mined, bullion that we've bought and we are storing it in a safe somewhere and backing our tokens with that. But I think in the white paper there are a number of clues that can lead us to an assumption. Granted, it's not a fact. I can't say it is fact. It might be. Who knows? But I think there are a couple of clues in the white paper that give us an idea of where it's going to, which way it's going to go. I think that in the beginning, there won't be gold backing it immediately. They first have to generate income, and they are going to be generating the income via mining other altcoins and converting that to Bitcoin or whatever, and then purchasing the gold, as far as I'm concerned. But I will leave that decision up to you. You can come to your own conclusions. But I think we should go through just a few sentences that I went through the white paper, and I've just extracted a few sentences, hopefully not too much out of context, but I'm sure these sentences elude or point to a certain way that they are going to back these tokens, put it that way. So let's jump right into it right now. This might take a little while. I'm going to probably go through a couple of points and then maybe discuss that point, and we can you can put your opinion of, if you differ from me, you can put your opinion in the comment section, and we can take it from there and maybe discuss it in a further video, unless we get a white paper come out in the next day or two. And obviously, if the white paper explains all of this to us in black and white, then this is all moot and for nothing. But I'm sure some people need, especially if you haven't read the white paper, it's good to get somebody else's opinion that maybe has read through it. I must admit, I haven't read the white paper word for word from top to bottom. I have looked at sections that I think I need clarity on more, and I've tried to come up with my own assumption or opinion of what they mean by it. And yeah, I think you make up your own minds. But let's go through a few things. Here we have a couple of points that I've made. I've just got a Word document here that I've made, and I've extracted a few sentences from the white paper and just put it into a Word document. I'm going to read through this point number 1 first. Cryptobontics Incorporated looks to partner with major mining companies for their proven reserves in the form of a note to establish a base evaluation against each token. Now, this is what I was talking about right in the beginning. They're not going to have gold. They probably don't have enough money to buy the gold right in the beginning. That is why they will back the token with a note against gold. Yes, probably still gold in the ground. Maybe not. It might be against gold in reserve, stored in reserve, gold bullion. It converts the notes against the reserves with its partnering mining companies by participating in cryptocurrency mining, which has been proven successful since the inception in late 2009. Now, this is where exactly my point. they will convert these notes against the reserves held by the mining companies as they mine the cryptocurrency. They can convert those notes backed by the money they've earned from mining and actually buy the physical gold, pay for it. Who stores it is another story, and I think there is something in it a little bit later on. These servers will harvest cryptocurrencies generated by answering mathematical equations. Processing these transactions through the blockchain is referred to as mining. The miner is rewarded with cryptocurrency that is supported by the harvested blockchain. Exactly what we're talking about. These cryptocurrencies have a cash value and can be sold through cryptocurrency trade exchanges, depending on the harvested currency as well as the mining rigs being used. Even with the difficulties to extract data from the blockchain, it can potentially generate an average between $4.31 and $12.13 per day based on ROI as of November the 6th, 2017 per machine. Using this process, the daily earnings are used for several things. The company uses the daily mining proceeds in this manner. 50% or half of the mined income used to buy physical bullion from the partnering mining companies on a weekly basis. Now this is where I think my opinion, that they are going to actually be backing it with physical gold bullion. Where and who stores it, that's another story. But they will own the gold bullion, mined and refined in physical form, held somewhere. So they will take 50% of their daily earnings, you can say, from mining, used to buy physical bullion from partnering mining companies on a weekly basis. 20% of the earnings is used to buy more mining rigs to create exponential growth in earnings and physical bullion holdings. So there we have it. Another 20% or a further 20% of their income daily will be put into a kitty, and that will be used to buy more mining rigs on a weekly basis as well. 15% to support buyback tokens from the trade exchange marketplace. Now we'll talk a little bit more about this buyback strategy later, but my understanding of it is they use 15% of their generated income daily to buy back tokens off the market. Now what this is going to have, in my opinion, the effect that this is going to have on the price of the token is they're backing each, remember they are backing each token by $1 worth of gold. So if there are 100 tokens, you've got $100 worth of gold, and they'll each be worth $1. But if the company goes and buys back 50 of those tokens, you've now got 50 worth $100, which makes them each worth $2. This is how I think it's going to work. So over time, the coins that stay in circulation are going to increase in value, and I think it's going to increase in value quite exponentially. Eventually, if you work it down from, let's just say, 100 tokens just as an example, worth $100, you'll get down to a stage where you've got 50 tokens left worth $2, and you'll eventually work your way down to one token worth $100, or rather $100. So it effectively increases its value 100 times. Now, as you know, we have 3 billion tokens, so we've got a long way to come down, and the growth of the tokens that stay in circulation is going to be quite spectacular, in my opinion anyway. Let me just have a sip of coffee. And another 15% used for the cost of operations for the mining platform. That pays for their day-to-day running costs. Lights, water, you name it, rent, whatever. CryptoBontics has essentially created a true compound growth asset that depletes in the number of tokens daily from its buyback and burn program. That's exactly what I've just said. So the value is there. You must remember they are mining and increasing their gold bullion stocks every day are going up. The number of tokens is coming down. So the effect is cumulative, and it's exponential. The more the tokens go down and the more the value of the stored gold goes up, the more the value of each token goes up, and it's quite a steep curve as the tokens in circulation decreases. This plan is set in place to decommission tokens so that the value increases in even greater proportion than the initial base value. Exactly what I've just said. The tokens for each base metal act as a coupon for physical bullion. After year 2, holders of the tokens can exchange the tokens for the physical bullion that backs the cryptocurrency. After a 2-year period, as far as I understand it, they will be opening up an exchange window period every year after year 2, I think, and you will have a certain amount of time if you want to exchange your token. In this case, it will be dignity token for gold. If you want to exchange your token for however much gold it is worth at the time, you will have the opportunity to do so. Approximate amount of gold bullion backing each token. Now, here we go. We come back to the actual weight of physical gold backing each token. It is 0.02445 grams of gold per token. Price value of each token based on a market quote as of November the 6th, 2017. So that will equal 30 billion US dollars worth of gold at the end of the day. Activation of the coupon redemption program. That is scheduled for November the 1st, 2019. And the expected completion of the buyback and burn program is roughly a 15-year period. The number of mining rigs to commence mining program, that is 12,500 rigs. I believe that they already have these 12,500 rigs, and I think they have been mining for at least a week already. So the process has already started, and I would imagine that they've probably purchased some physical gold already. US dollar activation of the coupon redemption program. That is November the 1st, 2019. The expected completion of the buyback and burn program, 10 years with the window open for 15 years. This is where we've just covered that in point 5. I see 15 years is their maximum projected period, and 10 years is their minimum, I would imagine. The latest or the new white paper, when it comes out, will probably clarify that for us. The number of mining rigs, we've got that. 50% used to buy physical bullion from partnering bullion suppliers on a weekly basis. And we've been through all of these already. So I've put this little note together quite quickly, and I see I have duplicated a couple of things. Not a problem. Essentially, CryptoBontics believes it has created the first true compound growth strategy. Exponential earnings are predicted by bringing new mining rigs online daily in the cryptocurrency mining fields. Thus, as the daily purchase volume of bullion and additional mining rigs grows, the net holdings that each token represents makes the CryptoBontics tokens the most secure and valuable cryptocurrency in the sector. This is exactly what I was talking about. As the number of coins in circulation decrease, the amount of bullion increases, the value of each token increases exponentially. CryptoBontics has planned for a 9-month forecast before all 55,000 mining rigs will be in place against all 4 tokens. Now, 55,000 mining rigs, and you can do the math yourself on those expected income, what each rig can earn in a day. Multiply that by 55,000 and you have quite a significant figure. And I believe they are not just going to be mining one altcoin or one cryptocurrency. They are going to be working on a software that will tell you exactly on the day which cryptocurrency or altcoin is the most profitable that day, and they will mine that day. So they are maximizing their profits every day by using clever software. The 20% weekly growth from earnings will be easily met by the mining rig manufacturers, and growth will not be an issue as the company moves ahead with its model. Bullion reserves and partnering bullion suppliers. CryptoBontics looked at all possible places to acquire bullion. Now, up to this point, we don't know who those suppliers are. I can tell you that information that I've heard is there are only a handful of, let's just say, the top 5 mining consortiums or companies in the world. CryptoBontics has sourced their gold from one of these guys, one of the top ones in the world. I'm not saying it is one of the top 5, but it is one of the top and biggest mining houses in the world. These are the big guys. As most cryptocurrencies trade at a multiple of their trade value, of their true value, we can estimate that the CryptoBontics tokens should have a street valuation of 2 to 3 times the current bullion value. Yeah, they are saying there may be a bit of speculation, but they are saying that because of the fact that cryptocurrencies normally trade at 2 to 3 times their real value, they are expecting, once this is all going, the information is made public, and everybody knows who is involved, what's involved, and exactly what the business model is. They are estimating that because of the popularity of CryptoBontics and what they are doing and people's perceived value of the coins, these coins are going to trade at 2 to 3 times the current bullion value. And if the bullion value is $1, that means that they are estimating that these coins are going to be trading at $2 to $3. Now, if you had bought in right at the beginning where a token was worth not even half a cent, if you bought in, say, $10,000 worth, and it goes up to $2 per coin, I think you're going to be smiling. The mining operations expect to grow by a factor of 15% of the daily earnings, which brings more mining rigs online weekly. We've been through this already. This will increase the weekly earnings on an exponential basis unless the value of the mine coins drop significantly. 50% of the daily mining earnings is paid to the companies partnering bullion suppliers to pay off the convertible mortgage against each token, making the bullion available for the redemption program. Now this to me is probably the most telling paragraph in the whole white paper as to what they're going to be doing with regards to backing the tokens. In the beginning, there's not going to be gold. They won't have the money to buy all the gold, but they will have this mortgage, as they call it, a guarantee. They will have these, it's more like a loan, but as they earn, they pay off these loans and they start earning the gold back. And that will become available for the redemption program. In the company's forecast, a 30% weekly negative buffer has been built in for drop in market values. Now, that is a drop in as one word, and I read it as one word. It's the drop in market values. Loss of mining days due to electrical issues, loss of equipment, and the difficulty increase in blockchain harvesting as time passes. So they've thought of all the possible scenarios that could hamper their mining and therefore decrease their earnings per day, and they've factored in a 30% weekly negative buffer. Now 30% is quite a lot if you think about it. That's a third of your production. They've catered for a 30%, 1/3 loss in production, and they're still going to make it, which is pretty cool. This is the closest forecast the company can project given the current statistics provided by the industry at the time of publishing this paper. As we know, this paper is getting old already. Hopefully there will be some updated statistics to either back these figures up or update them. 43 volt and storage. Now, I'm not exactly sure. I think 43 volt might be a storage facility that they've looked at hiring. But the next sentence here might explain that. CryptoBontics has been seeking the most viable and strategic manner to hold and secure the physical bullion upon paying off the convertible mortgage against the reserves. To me, this says as they pay off these reserves, they will take possession of a certain amount of gold as they pay it off, because they don't have the $3 billion pay off all the gold, as they call it, their mortgage against the gold, once off right in the beginning. So they are going to pay it off and make it available for the redemption program as they go on, and as more coins come into circulation, and also during the buyback period, which will make the coins. Remember, there's a fixed amount at the end of the day, a fixed market cap of 3 billion. Not all are in circulation yet, so the number of coins that are in circulation are going to increase for a while. Although there's a buyback scheme going, the number of coins in circulation are going to increase. But eventually the two graphs will intersect and the values will increase. These options will finalize as being one of the three or a combination of all thereof. So they're planning a strategic storage of gold, whether it be bullion, mortgages, and probably maybe even gold in the ground to some extent. But from what I can gather so far, is that they will be buying physical gold. They have to, because in 2 years' time, the redemption period opens, and there are going to be people that are going to want their gold. If there's no gold available, the coins automatically become valueless, and people will lose faith in them, and that will be the end of the coin. So I suppose the cutoff period, or the D-Day, will be the date they open the buyback period, and people are going to come and say, I've got $500,000 worth of Dignity token, please can I have my gold? If they don't have it, that's the end of the coin. But I think they're going to have it. They have a plan. We've already read their plan. It sounds feasible. I know they've done a lot of case studies and research into this. It's definitely feasible. And we know they've put this all together without any funds, or without having an ICO to raise funds. Their partners that they have partnered with to put this business together are so big and have the resources to just do this. They don't need to borrow the money or raise the money. All physical bullion, once acquired and freed from the debt, is then moved to a secure bullion market vault operator. Now, I think that might be 43 Vault. I don't know. I haven't looked them up. There might be a secure vault bullion keeper, for lack of another word, that offers this service to hold your bullion for you. And this is what 43 Vault might be. That is about all that I've got here. To summarize this, I think that in the beginning, no, they won't have gold to back each coin, but they have started already, and they are mining for the gold. They won't need gold bullion right away, because the redemption period only opens in 2 years' time. So the coins can be traded on the exchanges, and whatever value they achieve on the exchanges, that's up to the market and the faith they have in the coin. But when the time comes in 2 years' time, when they say, okay, the redemption period, or first redemption date has come, redemption period is now open for X amount of days, weeks, months, whatever it is, you are free to come and collect your gold. Then they've got to have that gold, and they are already mining and earning the money from the mining proceeds to pay off those mortgages, as they call them, against the gold that whichever mining house is either storing for them or producing for them, to pay off these people, or rather to give these people who want their gold bullion their gold. I think it's a brilliant idea. The people involved are obviously not small time to put something like this together. Now, CryptoBontics is not just the 4 tokens. CryptoBontics is part and parcel of a far bigger business, far bigger plan and business model. They have Arbitrade, which is linked to them as well. Arbitrade is a different animal altogether, and we will cover that in a video in the future. Things that are going to come out of Arbitrade are quite unbelievable, and people are going to love what CryptoBontics and Arbitrade have to offer. Unfortunately, they have had to play catch up at the moment. Some information leaked out quite a while before they were ready to release it. People jumped in, started buying the token, it rose in value slightly, and then the company was caught with their hands in their pockets, basically, not ready. They don't have everything ready, and they're now scrambling to get stuff ready and to release some information. Unfortunately, the human being what they are impatient, and I'm sure if you've been to the forums, you've seen the crap that gets posted there by people, so-called knowledgeable people. All it is a lack of knowledge. Everybody just needs information. Once the correct information comes out, all of this FUD, as they call it, will just disappear. It's uncertainty. Some people have got a fair amount of money, myself included, invested in this coin, and they don't want to lose their money. Some people panic, they sell, and well, that's all this business is at the end of the day. It's transfer of wealth from the impatient to the patient. Hold your coins. As far as I'm concerned, this business is 100% legitimate. They've just been caught off guard with a information leak that has kicked things off prematurely, and now they are just playing catch up. I'm sure they will catch up. As far as I know, 99% of everything has already been put in place. Unfortunately, there's some information that I can't share with you, but I am confident that all of this is legitimate and is going to happen. It is going to be huge, and those that are faithful to the coin, who believe in the coin, and who have invested their money into the coin are going to be rewarded handsomely. That's it for this video. I think I might do one on the, I do have an arbitrade white paper. I might go through that and just summarize a few things. There's some amazing things coming out of their white paper, out of their plan. Yeah, it's going to be fantastic. I just wish it would happen a little bit sooner, like everybody else, but I'm patient. I'll wait. At the moment, as I said, I'm a very early investor, so even at the current low in price, I'm still way up from where I started, so I'm not crying yet. That's all for now. Let's get out there and make some money.